afternoon, everybody. My name is Chris Widello. I'm the Director of External Affairs for NYSAFA, and want to thank you all for taking the time to join us for a great presentation this afternoon on the new solar incentives and how you can unlock the benefits of the Inflation Reduction Act for affordable housing. Back in August, Congress passed, and then President Biden signed into law the Inflation Reduction Act. And in this bill, there are a number of different tax credits for clean energy, and also incentives for people to install solar panels. And a lot of this has an impact directly on affordable housing in a way that hasn't been available before. So we were fortunate enough to connect with the Housing Partnership to put on this presentation. So I want to introduce our guests for this afternoon, who will be briefing us on what you need to know about the IRA and how it relates to affordable housing. First, we have Jared Lang. He is a principal. He is a principal with Housing Sustainability Advisors. And then you'll next hear from Esther Toporovsky, who is the president of HP Sustainability and executive vice president for New York City Housing Partnership. So Esther, I'll hand it over to you.
Great. Thanks so much, Chris. Can you guys hear me okay?
Yeah.
I think so.
Okay, great. So I'm just going to go over the agenda for today and just get into what we're going to walk through. So for the agenda, first, Chris, thanks so much. And thanks for NYSAFA for hosting this webinar for folks. The next thing we're going to talk about, just a little bit of New York State context, and then we're going to go through an overview of the Inflation Reduction Act and sort of opportunities for developers and affordable housing in particular, and what incentives are immediately available and what are also in development as part of the IRA. And then just our efforts that we've been doing at HP Sustainability to help support partners meet that, and then a bit of discussion and questions after. So as Chris said, the IRA, or the Inflation Reduction Act, has sort of a lot of amazing sort of game-changing provisions around climate and opportunities specific to affordable housing are in a few different buckets. So for solar, what we're seeing is the solar tax credit has doubled from 26% to about 50% for affordable housing. And there's other sort of first of its kind tax credits, like for battery storage. And the provisions in the tax credits have changed and have been sort of updated to a degree that can benefit nonprofits directly. And also how the tax credits are actually structured are more beneficial for development deals. So Jared Lang, my colleague here, is going to go over that in a lot more detail later. And another bucket, just so you know the buckets of what has changed and what is in the IRA that'll benefit. The energy efficient home credit is a tax credit that could be stackable with LIHTC, or low-income housing tax credits. There's also other sort of funds flowing down in the billions through energy offices that'll really benefit affordable housing that are also in development. And there's also the Greenhouse Gas Reduction Fund that folks might have heard about that the EPA will be administering. So there's a few buckets here. And sorry, the Greenhouse Gas Reduction Fund, there's going to be sort of $15 billion, a specific set aside for low and moderate income. So what we're seeing with the IRA is that there's not only climate money, but there is a lot of funds where the provisions are more beneficial to affordable housing and low and moderate income than had been done before. And so this is just to give a very high level overview of how we're starting to look at it from an HP sustainability perspective, and talking to NYSAFA and other folks about how meeting these regulations can kind of generate revenue streams while you're sort of meeting your compliance targets. So I think a lot of folks know CLCPA, or the Climate Leadership Community Protection Act at the state level in New York, is having folks reduce emissions. Well, the industry writ large 40% by 2030 and then 85% by 2050. So really aggressive targets. And then Local Law 97 directly sort of affecting buildings in New York City with carbon caps. And those becoming more stringent over time. So we started to think about, we have expertise at HP sustainability, and I would say affordable housing development, but also we really understand green financing, sort of climate, and how to kind of bring that into affordable housing deals. So when we looked at the IRA, we started to think about how do we dig into these incentives for solar and also efficiency, and how can we sort of utilize that, since a lot of these were sort of unfunded mandates, to start to think about pathways for owners to meet local law 97 carbon emissions caps. Sorry, wrong direction. So again, our focus today is what can benefit affordable housing, and really how to stack some of these things into your deal, and how to gear up and access some of these things to access it in 2023. So we're going to really focus on the boosted solar investment tax credit that Jared's going to go into, and a revamped 45L tax credit, and that's specific to energy. And again, state energy offices will have quite a few, I would say, direct energy investments that are going to be quite significant per dwelling unit, distributed affordable housing as well. But those programs are going to take a little bit of time, and we would like to do kind of a part 2 webinar on those programs as well, as state energy offices start to kind of get that stuff together a little bit more on what those programs are going to look like. So I will have Jared, sorry, let me go back, get into just the ITC in general, and what the IRA updates mean sort of for tax credits and deals, and give us some examples.
Sure. So I'm Jared Lang. I'm actually a housing developer with a nonprofit housing developer down in the Washington, D.C. area, and an advisor to HP Sustainability, to the Housing Partnership. And I've been developing solar on affordable housing specifically for about 10, 15 years. And, working with the programs that we had. And now it's a very exciting time with some of the changes that have been made in the Inflation Reduction Act. So I will apologize in advance. I have sat in on a bunch of presentations on the Inflation Reduction Act changes so far, and they've been very kind of like welcome-ish and high level. This is a little bit of like a 202, a more advanced course. I just don't know how to do it any different. And I'm excited about, there are specific provisions that I think you should know about that I want to jump into. So I'm going to go real deep, and please feel free. We're going to save time for discussion at the end. And Esther, if you see questions that come up, I don't know where the chat box is, or Chris, you're welcome. I can stop. You can interrupt me.
Happy to.
Okay. So next slide. Okay. So this is, the federal solar investment tax credit. People call it the ITC. It's a tax credit deduction on your taxes for a percentage of the total solar investment. And this really is the most significant incentive that's been fueling solar over the last 10 years. It was scheduled to sunset, and it was already starting to sunset. And this is, you can see the schedule: 30% tax credit, 26, 26, 22, 10. And the IRA just extended the standard tax credit up to 30% again, and then extended it all the way out to 2032. So this is really exciting. It creates a lot of consistency for the industry, lets us kind of focus on larger deals and deals that happen over multiple years. And this is going to be really helpful. Next slide. So the next thing that the Inflation Reduction Act did was it added these bonuses on top of the standard deduction. And one of the biggest bonuses is actually for regulated LIHTC housing. And so there's a 20% bonus right on the top of the standard ITC if you are regulated housing. There's also a 10% strategy, and there's some other approaches if you're naturally occurring affordable housing, but regulated, it's easiest on regulated housing. And then in addition to the LIHTC bonus, there's also another 10% bonus if you have domestic content in your project, and then another 10% bonus if you are locating your project, if you're siting your project in a community where they produce energy. So there's potential that you could get a total of 70%, 70 cents on a dollar of the cost of your project off, which is just, unbelievable to me. So next slide. This is the previous one. Okay. So the next thing that it did, and this is really for the nonprofit partners, nonprofit states and rural cooperatives, is they call it a direct pay option, but really what everybody would think about it as is a tax credit refund for those that don't pay, that don't have tax liability. They can apply to get this, the tax credits as a payment from the IRS. So this makes it easier for nonprofits and state and local governments to participate, and solves a big problem for them investing in solar. Next slide. The next thing the Inflation Reduction Act did was this sort of idea of credit transferability. And really what they do is they let you sell the credits now. So you used to have to form a partnership similar to a LIHTC deal with a 99% LIHTC investor and 1% general partner, very similar to what you would do in low-income housing tax credits, and in order to monetize the credits if you couldn't use them yourself. And it was pretty good. Because of losses and depreciation and everything, we would be able to get $1.05 or $1.10 per credit. But post IRA now, for those that don't have tax liability or significant tax liability, you're actually able now to sell the credits. And they're still kind of we're in the early stages. They're standing up the market for this. And a couple colleagues that are brokers tell me that a conservative price for this is 80 cents maybe starting out per credit, and then we're probably going to see closer to 90 cents per credit going forward. And then this makes it so the project sponsors can stay in as the 100% owners of the solar projects, and they can take the losses and depreciation themselves. They can sell off the credits and then take the losses and depreciation. Next slide. So I just wanted to show a little bit of a sample project to give everyone a feel for what we're talking about here. This is 3 properties across New York City, across a couple of the different boroughs, of a total of project size of 335 kW. Next slide. So if this is just kind of like what we have been seeing in terms of project size, project cost. So 335 kW on a bunch of high-rise rooftops in New York, maybe conservatively $3 a watt is how solar is priced. The total cost is about $1 million. And, with the 50% bonus tax credit and losses and depreciation, we're seeing these types of projects have basically $1 million in tax credits, losses, and depreciation in year 1. So these investors are getting their investments returned in the form of tax credits and benefits in year 1. Then a project this size might have about $50,000 a year in savings over 20 years. And, the unlevered returns are in the 20s, the 20%. And then, there's always the potential. I mean, the debt markets are pretty crazy right now. Interest rates are pretty crazy, but there is, you know, an opportunity here to leverage a little more. Next slide. So I just wanted to, you know, there's a lot of different programs in here, I think, that people go over when I see some of these welcome presentations. And really, you know, a lot of the other programs need to be still worked out and implemented from the federal government through the states. These two programs, you know, the changes to the tax credits and then this new 45L tax credit are really the programs that are available to you right now, immediately. This is a former program, the energy efficient home credit. And it had it used to exist, but it had a very different look to it. And I think really, you know, what's interesting to us is that, especially in New York, we have to meet some of these requirements anyway. So effectively, the federal government just created a new program for us to get paid for things that we're doing anyway. And Energy Star for new construction is the sort of lowest standard of requirement here for the $500 per dwelling unit. And that's automatically required if you're taking money from New York Homes and Community Renewal, you know, or you have to meet Enterprise Green Community standard. And, you know, DOE's like zero net energy ready is a higher bar for sure. But, you know, a lot of our colleagues are chasing some of these higher efficiency standards. And I still need to do a little research. I'm a little unclear if, you know, which subordinate loan products from the state require prevailing wage. But if prevailing wage is already required in your project and you're doing Energy Star, that's $2,500 a unit on a 100-unit project. That's another $250,000. That's just, you know, sort of money for doing things that we've already pretty much committed to do. Next slide. Okay, here he goes. So this is, you know, the HP sustainability team led by Esther with a few staff, and I have been, a lot of developers have been reaching out to us, and, you know, these are kinds of the ways that we've been sort of trying to support the community. We've been looking at individual development projects, you know, their designs and models, and just kind of making sure that they're leveraging tax credits and the grants and debt tools as best as possible. We've been looking at portfolios of existing assets and just kind of, you know, considering whether there's any tools available to help them with capital needs and save energy, and looking across portfolios for solar investment. You know, I think these incentives are kind of really encouraging us to think portfolio wide and, you know, think a little deeper about how we can make bigger investments, and they could be competitive with some real estate deals. The other nice thing about, you know, a solar investment on your properties is that you don't have to go out and chase a new deal. This is a deal that exists on top of your assets. And then, you know, we've also been doing some advising for the housing agencies on how to capture some of these federal funds that are coming down from Department of Energy and HUD, and make sure that these funds are tailored in a way that really works for the developers. Next slide. Are you going to cover this one, Esther?
Yeah, sure. Thanks, Jared, for just going over all
Sure.
of that. I think, you know, we also want to put on the table that there's a lot of really interesting, great stuff happening through the IRA. And I think Jared emphasized the sort of tax credits that are available today. And there's also some innovative stuff that's happening in New York. So the Climate Friendly Homes Fund, this is a fund that is coming out in January, about $250 million to electrify major building systems. It's going to be administered by CPC. It's actually funds coming directly from the state housing agency, from HCR, over to CPC to administer. We're a community partner as part of this fund. And I think New York is trying to think of creative ways to get to properties that are between 5 and 50 units that can be regulated and unregulated, but meeting really specific measures around electrification. So we're also sort of rolling our sleeves up and partnering with a lot of folks to help administer some dollars around sort of heat pumps and specific measures to help meet electrification goals. So that's just another sort of pot of money that we'd encourage folks to sign up to get the email notifications, and just a little bit more information about this fund as well that's going to be administered by CPC.
Yeah, and I would just add, you cannot quote me on this because we're working with the groups on this, but we're sort of pushing for $10,000 to $20,000 a unit for heat pump upgrades for without necessarily needing a match from the sponsor, the housing sponsor.
So I think that was really what we wanted to cover today, just in terms of what is available immediately, and not get too much into sort of the policy overall of IRA, but really how it could help development deals. So we're at sort of discussion in Q&A. If there's anything in that chat box that you want to break open, or if anybody wants to ask a question, feel free. We're here to help.
There were a couple of questions, Esther. One of them was asked, what is domestic content?
Yeah. They're still working this out, but there's going to be a percentage of the solar equipment that has to be made in the US from US materials, with US labor, and they're kind of working through this right now, Department of Commerce and Department of Energy.
Okay, thank you. A few more questions. Can you get the bonus on top of historic tax credits in a similar fashion than you can on LIHTC credits?
Yes.
Easy, thank you.
Yeah, you absolutely can. And there's a lot of other little provisions in here. There are some changes that they made where, when you were doing LIHTC with the federal, with the solar tax credits, you used to have to discount your LIHTC basis. That's gone now. There's a bunch of nice changes that are sort of here to help us on affordable housing that we've been doing some analysis on, and that's worth, that's going to be worth hundreds of thousands, just millions to some of our deals, some of our larger deals.
Okay. Bunch of questions. I guess I'll just go through if that's good with you.
Yeah, thanks.
Are deals that have closed eligible for higher credits than LIHTC boost?
I'm not sure. I don't understand that question.
Okay.
Sorry, say it again, Chris.
Can you say it again? Yeah.
Yeah. Are deals that have closed eligible for the higher credits and LIHTC boost?
Oh, yes. Okay. So yeah, as long as you have not placed your solar in service, you can do this on deals. Of course, you need to work out with your tax investor to take up the additional credits. I'm actually working on a deal right now with Truist, where I'm looking at both getting the 45L tax credits, getting them to take the 45L and the boost for solar. And it's a deal that's in motion already.
Great, thank you. Let's see. if a nonprofit able to complete this type of project without expert like, so is a nonprofit able to complete this type of project without an expert like Sunrun or any other solar financer? Is the process overly complex?
I would say, like, if a nonprofit is a real estate developer and knows how to finance real assets, they can do this. They just need to figure out a team that knows how to design and actually install equipment so that it performs as expected and can manage the risk. We're happy to talk through that a little bit about how to make that happen.
Great.
But yes, I think this really opens up the doors for nonprofits to own their own their solar on top of their own rooftops.
Okay. Another question is, where does it say that the low-income adders are for LIHTC? Will they not be available for other types of low-income housing?
Oh, I just say LIHTC in a federally regulated. So project-based Section 8, 202, LIHTC. I just know that our community does a lot of LIHTC, so I use that as an example. But any federally regulated housing basically just qualifies automatically for the 20%.
Okay.
And there are going to be other ways for naturally occurring affordable housing to qualify. We're still waiting and providing guidance on some of the regulations. We're fully aware of the difficulties of an organization that doesn't have to income qualifying. So we're trying to make it rent-based qualification or some other strategy that is sort of easy and off the shelf.
Does the 1 megawatt threshold for prevailing wage that applies to solar ITC also apply to geothermal heat pumps? If so, is there a conversion you are aware of, or a way that geothermal heat pumps can be measured in watts?
I have to get back to you on that question. I'm not certain. I haven't really thought about that one yet. I would assume probably yes. They're very strict about the wage requirements in this. And they realize that it'll add cost, and that's why they've been so favorable in terms of the additional tax credit boost. If they can figure out how to quantify it, I think they will, but I can get back to you on that.
Okay.
And I just put contact info up as well if folks want to. We're pretty accessible via email, so if you want to email further questions to dig into.
And if you have the original invite for this event, you can see both Esther and Jared's bio and their contact information. Any timeline, Jared, on the release of IRS and other guidance?
So it's a great question. We're waiting for the application. You have to actually, one important thing that I didn't mention is that you have to apply for the LIHTC, the bonus, the low income bonus for LIHTC. It's not by right, and there is a cap. So we're working with our owners, our partners, to really kind of like line everyone up and be ready for the application. We expect to see it early, maybe late this year, December, or early next year, but we don't know exactly what that looks like yet.
Thank you. Is there a list of energy communities?
I think so. Yes. I think this is a hard credit to get at. This is going to be more for, former coal country in West Virginia that wants to do a large community solar project or a large utility scale solar project. this is going to be hard for us to access as affordable housing in urban areas.
Gotcha.
So I can follow up about that. But yeah, I do believe there is like a some sort of area map for this.
Okay. So this is very New York City specific, but typically HPD will use any additional funding source to replace their funds and look for reductions in the M&O underwriting so that, well, I guess some more of a statement, so that there's often no net gain to the project. Concern that, right, that they'll by taking advantage of other
I know exactly what you're talking about.
Okay.
I deal with the same thing here on my deals. It's a tough conversation, right? With soft money,
Right.
filling in gaps. We're encouraging HCR in there. We're serving in a capacity with NYSERDA and HCR, and encouraging HCR not to change their underwriting or take away other funds. They've been very receptive. I would assume that HPD will do the same. I can't speak for them, but we are looking like we're going to be advising them next year on some of their programs, and that will be one of our very important recommendations.
Yeah, I would say the major goal, some of the lists and the advisory that we're doing with the housing agencies, and HCR has been incredible to work with. We've been working with NYSERDA and HCR, but helping to work with the housing agencies where they want to meet their housing production and preservation goals, but there's also these climate goals which are conflicting, right? You can't eat into one or the other kind of source of funding. So what we've been doing with HCR is working with them to get additional sort of energy money that they could put on term sheet through their Clean Energy Initiative program. We've been spearheading that with them on their 4% and 9% side. And then hopefully in January or earlier, also doing the same thing with HPD so that you can get sort of soft subsidy on top of other soft subsidy on top of the sort of housing money to be able to meet a lot of this stuff. That's a good question.
Yeah, we've been getting HCR to boost their soft money, to take grants from NYSERDA, roll them into their soft funds, and boost the award. So we're gonna keep encouraging that. And we haven't gotten deeply into HPD yet, but as we do, we'll be pushing for that. I think don't assume that. I think we should do the work and then try to hold the ground on the underwriting around the soft money.
One of our participants mentioned that NYSEA, NYSEIA.org, has published a map of energy communities for their members.
Oh, cool.
Yeah,
NYSEA?
Yes, NYSEA.
Oh, cool. Thank you.
No problem.
Thanks for sharing.
So let's see. I saw two related to this. So could a project get the 70% ITC credit? And there was a follow-up from the same person. Where did you get the confirmation that you can stack the ITC adders to 70%? I think they're related.
I'm happy to share like several sources. You can stack them. I've seen some areas where they say you can stack it up to 80%. I haven't figured out where the other 10% would come from. But I'm confident that you can stack them.
Do you know if you can stack NYSERDA rebates in New York City installs as well? Do you know if that's possible?
So NYSERDA hasn't come out with any guidance like changing their programs yet based on the IRA benefits. I do know that. So I would assume yes, right now.
Yeah. And we'll be working with them directly. That'll be part of our sort of round two is part of what we want to do also is we're working with the housing agencies, but also with NYSERDA on advisory in terms of how infusions of how this other sort of capital can work well with housing.
Great. One of our members on Long Island said that he is having an issue getting solar companies to install commercial solar on Long Island. It seems like they're only installing for private single family. Do you have any contacts that you could share for Long Island?
You know, I think we can maybe take that one offline.
Okay.
The utility advocacy stuff is tough. We really do try to, like, there are certain nonprofits that are interested in the utility advocacy. We're much more of like trying to support the partners of the housing partnership in deal structuring, because that's where the organization sits with the HDFC work.
Good. Okay. Thank you. Let's see what else we got here. How do you submit funding for direct pay?
There's going to be a form that you can fill out. You're going to have to do a cost certification, a third-party cost certification, and then you're going to be able to fill out a separate tax form when you file. I don't know. I don't think the form exists yet, but it will for 2023.
Right. And I'm going to paste the NYCIA Energy Communities link into our chat. Attendee just shared that link, which is great. I'm doing that right now. How about just HCR, state regulated affordable housing, with no federal funds? Would they be able to qualify?
I believe so. I believe it would be easy because they really need some, like, they're just looking for some form of income certification of 80% AMI. And I think probably the HCR program would require that. So
thank you.
Sure.
So do you have any insight into IRS guidelines for the award of LMI bonus credits? These bonuses are limited to a certain number of MWs across the US in 2023 and 2024. So any information on allocation methodology would be helpful.
We are, talking to colleagues at the US Treasury right now that are writing these regulations. I think the best that you can do right now is kind of get some projects in line and start to prepare. The savvier solar companies and housing owners are starting to line up their projects and getting them ready to go. And as are we lining up a pipeline of projects.
Great. Looks like we are down to our last question, unless anybody else would like to submit one. What is the process for a nonprofit to get the rebate money from the IRS? When would we get this payment? After completion, placed in service, or the following April 15th? Can this be completed by nonprofit?
The following April 15th, you're going to have to figure out a way to float the cash,
Okay.
and in a loan probably, right? And then repay the loan, pay the loan down. And we're talking to, some of our CDFI partners about how these loan products would work.
Great. Thank you. And then I guess maybe for you or maybe Esther, does the housing partnership do this work for a fee?
Yeah, I mean, we work it out with each individual partner in different ways. But yeah, feel free just to contact us, let us know what you're interested in and what you're working on. We do a ton of stuff. We've been doing advisory to agencies. We work directly with developer partners. again, we're sort of first and foremost, like Jared was saying, we're in the business of sort of affordable housing, and really take that perspective. And we take a very nuanced approach based on what your needs are. So feel free just to reach out, and then we can kind of we're pretty organic, have a discussion back and forth based on what your needs are and what you're interested in going after. We take a lot of time and energy to kind of dissect and understand the funding. We're doing the same thing with the Greenhouse Gas Reduction Fund, just to really make sure that our partners can have access so that this stuff can flow really well for affordable housing, to preserve and create more affordable housing, to meet a lot of the climate goals, because we know there's a lot, especially in New York. So just reach out to us and then we can work with you individually.
Great, thank you. I think we got one more. The NP rebate is not when it is part of a tax credit deal question. I don't know if I understand that enough to clarify it.
Said NP or nonprofit rebate, or
maybe it's it's the question is the nonprofit rebate is not when it's part of a tax credit deal. I think I'm missing something here. I don't know if you can decipher that.
So I think I can try to explain this. Okay, so if it's part of a tax credit deal, the tax credit, the deal has to be a for-profit. You have to make a 168 election, so it's not a nonprofit. So yes, I mean, I think what you're saying is the nonprofit rebate can't come if you finance the solar as part of your tax credit deal. You'll need to have the tax investor, that's your LIHTC investor, also take those solar credits. Does that help? Good. Okay, David, you said you got it. Okay.
Great. So I think that is our last question. If anybody has one, please feel free to submit in the next minute or so. So I think the last slide that Esther shared, I don't know if you were able to put it back up. Esther had your contact information. If you just want to flash it one more time, I can also copy it into the chat if that's easier. But please, I think you would welcome anybody to try, to reach out if they have questions, right? And
yeah, absolutely.
Sure.
You guys have that in front of you. Can you see the email addresses?
Yep. I'm just going to simultaneously put this into the chat. So last call. I don't see any other questions, but we can share this presentation, correct? We'll be able to make a copy of it.
Send it around.
Yeah, absolutely.
If you share it with me, I can send it to everybody that attended, and we'll also make it available on our website for anyone that would like to find it. This has been recorded as well, so we're also going to put it on our YouTube channel so folks can view it a little later date. We'll reside there for a while.
Awesome. Well,
Okay.
I just want to say thanks, Chris. We appreciate the chance to talk to everyone, and it's an exciting time. I think the powers that be wanted to see more solar development on affordable housing, and I think they're going to get it.
Yep. No, we appreciate people taking the time, and as we dig into this and we learn more, we want to make sure that it's collaborative, and we want to share what we learn with everybody. So feel free to reach out if you have questions. Me and Jared are very, very accessible. We'll send around this as a PDF so you guys have access to this information, and we could just help you kind of navigate, as there are a lot of really good opportunities coming folks' ways.
We did have one more question if you have a moment. I think
yeah, go ahead.
Sure.
For a nonprofit who's attempting to do this work with a solar installer, what other financial professionals do we need to complete the entire process? I think you sort of talked about this earlier, an earlier question, right? You need to work with people that you normally work with, right? To on these types of things. So they're a nonprofit and they want to know who they need to bring in on the financial side to complete this.
I mean, I think there are a number of CFIs, CDFIs, and lenders in the space that are, looking to make investments in solar on affordable housing. I think they just need to figure out, if they're prepared to guarantee the funds, or through construction, or what kind of structure they want to use, and then bring in a really good installation partner that's able to get the projects done. One thing I would absolutely encourage would be an owner's representative or commissioning agent that really understands solar, to make sure that the systems get built as designed and perform as expected.
Right. Well, I don't see any other questions, so I just want to say thank you for your time and for this great presentation. And it was great. We had quite a number of participants, which is awesome, and a lot of questions. And hopefully we were able to answer as many, clear things up for anybody. It was, I think, very informative. And, I know there's information out there, but I thought this really put it all in one place, especially specifically for affordable housing. So as we mentioned, we'll make this available after the event, the video, as well as the presentation, and you'll have Jared and Esther's contact information if you would like to follow up with them on anything that is not clear or that you did not hear about today. So we'll just say thank you very much and have a good rest of your afternoon. Thank you.